Welcome to the Authority Hub podcast. I'm Nolan, joined as always by Claire.
And today we're featuring the expertise of Lisa Insalaco, mortgage broker in Cambridge, North Dumfries, on.
If you own your home outright, you're in your early 70s, and your bank just told you that you don't qualify for a line of credit because your income is too low. What exactly are you supposed to do with all that equity sitting in your walls?
That's the situation a lot of people in Cambridge and North Dumfries are in right now, and it's more common than most people realize.
It really is. And it's the kind of problem that Lisa Insalaco, mortgage broker in Cambridge, North Dumfries, is built to solve.
Let's set the scene properly, because I think the listener needs to feel this before we get into the mechanics.
A homeowner in her early 70s, Cambridge area, owns her home free and clear. No mortgage, but her monthly costs, groceries, utilities, medications, property taxes, have been climbing steadily, and her CPP and O's just haven't kept pace.
She's drawing down savings faster than she planned. And she's heard about reverse mortgages, but she's also heard that they're a trap, that the bank ends up with your house.
So she goes to her bank first. Reasonable move. And the bank tells her she doesn't qualify for a home equity line of credit because her income is too low to service the debt.
And that's the structural failure right there. The conventional system evaluates repayment capacity based on income. A retired homeowner with a paid-off house often looks unqualified on paper even when they're sitting on significant equity.
The asset is real. The equity is real. But the standard lending criteria can't see past the income column.
And that's not a personal failing on the borrower's part. It's a design problem. The system was built for working-age borrowers with employment income, not for retirees whose wealth is in their home.
Which is exactly why Lisa Insalaco's work in alternative mortgage financing matters so much in this market.
So let's talk about what a reverse mortgage actually is, because the misconceptions are doing real damage to people who could genuinely benefit from this product.
The core fact is this. A reverse mortgage is a loan secured against your home that does not require monthly payments. That's it. That's the thing that changes everything for this type of borrower.
Homeowners aged 55 and older can access up to 55% of their property's appraised value. The balance, principal plus accumulated interest, is repaid when the home is sold, when the homeowner moves into long-term care, or when the estate is settled.
And the number one myth Lisa Insalaco has to address with almost every client is the idea that the bank takes your home. It doesn't.
You remain on title. You keep full ownership. The lender places a charge against the property, the same way a conventional mortgage does, but you are not making payments every month.
The loan just grows over time as interest compounds, which is a cost worth understanding clearly, and we'll get into that.
In Canada, the two primary providers are Home Equity Bank, which offers the CHIP reverse mortgage, and Equitable Bank. Both are federally regulated. This is not a fringe product.
It's been in Canada for decades, and it's growing fast as the senior population expands. The Financial Consumer Agency of Canada tracks this. The reverse mortgage market has grown steadily as more Canadians enter retirement with significant home equity and limited liquid savings.
Now, who actually qualifies? Because this is one of the things Lisa Insalaco, mortgage broker, emphasizes. The eligibility criteria are different from anything in conventional lending.
Age, property type, and location. That's it. Not income, not credit score. Every homeowner on title must be at least 55. The property must be your principal residence, and it has to meet the lender's property guidelines.
Most detached, semi-detached, and townhome properties in Cambridge and the surrounding area qualify. Kitchener, Waterloo, Brantford, Guelph, the region Lisa Insalaco serves. Those properties generally meet the criteria.
And the maximum loan amount scales with age. A 75-year-old can typically access a higher percentage of their home's value than a 55-year-old, because the lender's risk model accounts for the expected loan term.
The older the borrower, the shorter the projected loan period, and the more equity can be released. That's the actuarial logic behind it.
Now here's something Lisa Insalaco is very direct about with clients in this specific market. Cambridge and North Dumfries property values are meaningfully lower than in the GTA.
Which means the absolute dollar amount accessible from a given percentage will be lower here than it would be for a comparable borrower in Toronto or Mississauga. A home appraised at $600,000 in Cambridge gives you a smaller ceiling than a home appraised at $1.1 million in the GTA, even if both borrowers qualify for the same percentage.
That real-world dollar consequence is something Lisa Insalaco models explicitly for every client. It's built into the projections from the start, not discovered later.
And the funds can be received as a lump sum, in scheduled monthly advances, or a combination of both. That flexibility matters enormously depending on what the borrower actually needs.
Someone who needs to eliminate a line of credit balance immediately might want a lump sum. Someone who wants to supplement monthly income might prefer regular advances, which also reduces the compounding effect on the overall balance over time.
Let's talk about that compounding, because the cost structure is where people need to go in with clear eyes.
Lisa Insalaco is direct about this. A reverse mortgage is more expensive than a conventional mortgage. Understanding exactly why is essential before deciding if it's the right move.
Because no payments are made, interest compounds. It gets added to the loan balance, and then interest is charged on the new, higher balance. Over 10 or 15 years, that can meaningfully reduce the equity remaining in the home.
Beyond interest, there are setup costs. An independent legal advice requirement, you must have your own lawyer review the documents. An appraisal fee, the lender's administration fee.
And there are costs that can surface later, on the servicing side, administrative charges, legal costs if the loan is ever contested, fees tied to the eventual repayment process. These should be disclosed up front.
Lisa Insalaco's guidance on this is plain. Ask for a full written breakdown of every fee, setup, appraisal, legal, any servicing costs, before signing anything. A broker who can't answer that question clearly is not the right broker for this.
The Bank of Canada's rate environment also matters here. When rates shift, so does the long-term cost projection of a reverse mortgage. That's another reason to model multiple scenarios before committing.
So let's go back to that Cambridge homeowner and talk about what the outcome actually looked like when Lisa Insalaco walked through the numbers with her.
What made sense for her was a combination structure. A lump sum to eliminate a small outstanding line of credit balance, and then monthly advances to supplement her income on an ongoing basis.
Lisa Insalaco modeled what her home equity would look like at age 80, at age 85, accounting for both conservative and moderate home value appreciation in the Cambridge market. The Cambridge, North Dumfries property values were built into those projections from day one.
The numbers showed she could access what she needed, live the way she wanted to live, and still leave meaningful equity to her family.
She understood her options clearly, made an informed decision, and stopped losing sleep over her monthly shortfall. That's the outcome.
And it's worth naming what made that possible. The reverse mortgage isn't subject to the same stress test rules that apply to insured mortgages, because there's no payment obligation to stress test. That's confirmed by OSFI's residential mortgage underwriting guidelines.
Which means a senior who would not qualify for a conventional refinance can still qualify for this. The product is accessible to exactly the people who need it most.
Let's address the other myths directly, because they're keeping people from even having the conversation.
The idea that heirs will be left with nothing, not necessarily true. Home Equity Bank's CHIP reverse mortgage includes a no negative equity guarantee. You will never owe more than the fair market value of your home at the time of repayment, as long as you've met the obligations of the mortgage.
Maintaining the property, keeping insurance in place, paying property taxes. Those obligations don't go away. Lisa Insalaco is clear about that. It's not a scare tactic, it's just the contract, and it's worth understanding before signing.
The myth that a reverse mortgage is a last resort for people in financial trouble. That framing misses the point entirely. Some borrowers use it to fund home renovations. Some use it to help children with down payments. Some use it to travel or fund experiences they've been deferring.
It's a mechanism for converting illiquid home equity into usable funds. That's it. And as part of a broader alternative mortgage financing strategy, Lisa Insalaco deploys it when it's the right tool, not as a default.
The evaluation always starts with the full financial picture. What are the monthly expenses? What income is coming in? What does the gap look like, and how long does it need to be bridged?
Canada's Federal Consumer Agency recommends comparing reverse mortgage options against alternatives like refinancing or downsizing before making a final decision. That comparison is something Lisa Insalaco builds into every client conversation.
A conventional refinance, a home equity line of credit, downsizing, all of those are on the table. The goal is to find the right solution, not to fit the situation to a product.
And if a reverse mortgage does make sense, the independent legal advice requirement is a genuine protection. Have a lawyer who is not connected to the transaction review the documents before signing.
Statistics Canada reports that seniors aged 65 and older are now the fastest growing age group in the country. A significant share of them hold most of their net worth in their homes while managing fixed or declining incomes.
The Cambridge, North Dumfries market has a lot of homeowners in exactly that position. Longtime homeowners with significant equity, retirees on fixed incomes whose costs have climbed faster than their income.
And the biggest barrier Lisa Insalaco sees isn't the product, it's the conversation that never happens because someone assumed they already knew what a reverse mortgage was, or assumed it wasn't for them.
A paid-off home is an asset. An asset that sits entirely locked up while its owner struggles financially is not serving anyone.
That's the truth that generalizes beyond any single client story. The equity is real, the need is real, and the tool exists to connect the two, if someone takes the time to actually run the numbers and explain what they mean.
If you're in Cambridge, North Dumfries, or anywhere in the surrounding region and you want to start that conversation, yourmortgageshrink.com is the right place to begin.
Lisa Insalaco is a mortgage broker in Cambridge, North Dumfries, specializing in reverse mortgage.